Hi guys, Harry Yotis here, professional trader for 20 years. I've started my career in 2005 and still alive in 2026. So let's get started with today, Thursday, the 22nd of January. It's Taco Trump's follow through day. We got the follow through that we were expecting from yesterday. Uh, of course, we're looking at the S&P 500 in case you guys didn't know, daily chart, and we got the follow through that we wanted. So let's talk about the technical picture. Bullish, I think, still. Remember, 2 days ago we closed below the 50, so we had to reclassify our bullish technical analysis into neutral. But we suspected it would be like this day and this day, where it would be very short order, where it would get recaptured. And we got it yesterday, and today we got that follow through, which I liked, which is important because we mentioned yesterday that the VIX got crushed, and I wanted to see follow through on the VIX as well. So this probably confirms the fact that we're probably going to keep going higher, and the VIX is going to slowly grind lower. Okay, and a lower VIX corresponds to a higher S&P 500. Let's get rid of the moving averages so you guys can see better. So the picture is bullish. We cover that gap, and I expect we go even higher. Okay, so we don't just look at the technical picture, which is bullish. We also look at sentiment. We pair them together. CNN Fear and Greed Index. Yesterday we were at 50. Now we're at 52. Slightly better. Not even close to being optimistic. Still fear in the momentum. We haven't gone to highs. A couple of greedy, extreme greed. Oh my God. Still put call ratios at extreme fear. People still buying puts. Okay. What I want to say is that any way you look at it, okay, this is a wall of worry. People are not happy. This market is at all-time highs. Everybody's looking for the next bearish thing to like pile on to. We're going to crash. There's going to be a recession coming, okay? We mentioned on all the macro that we see coming forward, and today we're going to mention it, that there really is no recession coming. I mean, if you look at the data, I mean, there's always a recession coming, okay? We just don't know how far away. I just don't see it right now or in the foreseeable future. Yet, this is fearful. We're still in neutral. We're not even close to greed. We went to greed for like one day, and then went back to neutral after Trump talked about Greenland and the market tanked. Okay, so we have all of the sentiment still in our favor as bulls. And on Thursday, we always get my favorite sentiment indicator, the AAII Investor Sentiment Survey, and well. Okay, one down day was enough to bring the bulls back down to like 43.2%, still higher than the average, which we are getting bullishness, but the bears are creeping back in above the average, about average, okay? So we still have the bullishness that we want, okay? But we don't have the low bearishness that we're looking for, okay? If you guys recall, during this big Trump tariff scare, okay, when the market fell like 20%, okay, a couple of months, we had this at 2. Extreme fear was at 3. We're not even getting that in the opposite direction, and the markets are near highs. I'm expecting to see greed and extreme greed get solidified. Remember, solidification is what we look, not 1 or 2 weeks. Okay, and this goes to show you that as the bears are popping back in, one day of like a down market of 2% was enough to get the bears creeping back in. So no matter what you look at this indicator, you look at this indicator, you look at the market, you can just feel out there that this is a wall of worry, and bullishness is not even close to being solidified in this market. We have no euphoria. We don't even have happiness. We don't have bare minimum greed. Can we get some greed for like a week? We can't even get it for 2 days. So that's why, like, if you look at all of the analysis, the fundamentals, by the way, are bullish. The economy grew by 4.4%, the GDP in Q3 of last year. Third quarter of last year grew by 4% plus. Okay, so the economy is still growing. We're not getting any signs of devastation yet. People are still afraid that there's going to be a crash. This is good for a bull. Okay, when it starts to turn, when the sentiment turns and the market starts to go a little bit, crazy, wonky, then we'll get worried. But as of right now, this is the perfect time to be a bull, and you should be a bull. So, and always on Thursday, we had some important macro developments that came in. We had the initial claims, 200K for January 17th for last week. Okay, nobody's panicking. Like we said, there is no recession yet. Okay, so initial claims, you expect to spike higher and continue to go higher if there was a problem. It's not. Okay, we see this week by week, and these numbers are not. People could say like the job numbers might be manipulated, but you can't manipulate initial claims. Either you have them or you do not. Okay, so the initial claims, nothing to be scared of. Okay, and we also had the Fed's favorite inflation indicator, the PCE. This is the U.S. core PCE. Okay, month over month, 0.2%. They were expecting 0.2%. They got 0.2%. So inflation is not roaring. It's still high. It's relatively stable, between 2 and 3% per year, core PCE. It's sticky. It's not going below 2%, but okay. I mean, that just shows you that the economy is doing well, and the economy is not allowing inflation to go down, but neither is it spiking up higher either. So you have inflation under control. You have jobs not panicking. You have GDP holding up, and yet sentiment is in the toilet. We have the bulls, but there's no cockiness out there. I want to see bull cockiness. I haven't seen it. Okay, so that's why all this together, we're bullish. Okay, macro, technicals, and fundamentals all point to bullishness going ahead. Okay, so in the last segment of today, because it is taco follow through and we got that follow through day, we talked about what sectors to be in, what sectors I think will outperform the market going forward. You always know that I've been talking about gold, silver, industrials. We talked about that yesterday, okay, and small caps as well. So today I'd like to talk about what sectors not to get into, okay. We talked about that. We touched about that a little bit yesterday in the QQQs, basically being flat, and that's because I don't like the Mag 7 going forward. I think the Mag 7 is going to underperform going forward. It doesn't mean they're going to go down. They're not going to go as up. They're not going to be the in sector to be in. Okay, they're just going to go up as the market goes up, but I don't think they're going to be huge. Like if you look at the Mag 7, Meta, yes, Meta caught a bid today. Earnings are coming up, and earnings will be key. Okay, earnings are going to be a key thing going forward. I suspect we have a good earnings season. Okay, which is yet to be determined. But as of right now, like this is still in a big sideways consolidation pattern. Okay, Meta. Okay, well, the only one that's good is Google, doing very, very well. Microsoft, though, anemic, downtrend, broke this support. Okay, not doing good. Amazon, basically like flattish, still at highs, but I mean they're not going to tank. It's just that they're not going to go as high going forward with the market. Okay, so stay out of the Mag 7, and of course, what I don't like is Bitcoin. Sorry, guys. Okay, as you can see, Bitcoin hovering around these levels after getting monkey hammered from this capitulation event. Okay, and as you recall with SPY, okay, as SPY was falling here, this was a capitulation event. Bitcoin was falling hard, 20-30% drop, right? And SPY went down 5%, because with the capitulation event in Bitcoin, they had to sell the margin call. The guys who got margin called had to sell assets. So they were selling good assets to raise money, including gold a bit. Okay, but as this was going down and the market stopped, this was the capitulation candle and it stopped. I said I'm bullish. I was very bullish here. You can go back and check. I said you want to be bullish, but you want to be in sectors that work, basically general equities and gold and silver, and basically the critical metals, all the plays that we talked about, okay? But not Bitcoin. I specifically said don't buy Bitcoin. Why? Because Bitcoin might have caught a little bit of a bid, but when something gets capitulated like this and gets destroyed, okay, it tends to stay down for a while. And you see it hasn't participated very well going forward, okay? So because Bitcoin won't do well, I don't think the Bitcoin miners will do well. If you look at Mara, I mean, it's very, very tough for Mara. Let me get rid of this. I don't really care about this downtrend now. It's very tough for Mara to catch a bid. I mean, if you look at it, I don't think it's really going to go anywhere, okay? Even MicroStrategy. Okay? I don't see these things going forward. I don't see these things catching huge bids going forward, okay? They would have to like break out of this downtrend, and like MicroStrategy would have to go above 200 for this to break. But I don't see the miners. This is just a holding company, okay? But the miners themselves, I don't see very bright days ahead for the Bitcoin miners, okay? So you don't want to be in this. It'll underperform going forward. You don't want to be in the Mag 7. And then the last thing I'm going to mention is oil. Okay, you don't want to be in this perpetual loser. There's a lot of the technicals for oil the fundamentals for oil are not good. I mean, you have war with Iran, you had Venezuela, all that. It's still not going to make this go higher. Okay, it's a glut. There's just too much oil out there. Okay, and there's a lot of supplies being put into the market, and you have the negative fundamental backdrop, and the technicals are very bad. Okay, I still have half a short working here. I got in here after Venezuela, and I quickly got out of half of it here because I didn't like how it was behaving immediately, but I'm still holding half short. Okay, if it goes even higher, I'm going to short it even more. Okay, so to me, I don't like the oil sector. It has tremendous headwinds going against it. I don't like the Mag 7, and I don't like the Bitcoin miners specifically. Okay, so that's it, guys. Let's recap. Taco follow through. We got what we expected. Expecting the VIX to crush 2 days in a row. It did. We got it. The follow through is there. I think we continue to go higher. The technical picture is bullish. We got the sentiment still at neutral. Okay, with a lot of people still in calls, in puts. Okay, I don't like that. And of course, the AAII came in. I love it. The bulls are still there, but the bears are still there. I want the bears to get killed. I don't want them to hang around. Okay, then I'll start getting worried as a bull. Okay, we also had some macro coming, initial jobless claims, initial claims came in at 200,000, nothing. Okay, and the core PCE at 0.2%. All of this stuff is supporting the bullish thesis. All of it put together, okay, is supporting the bullish thesis. So what sectors to avoid? Mag 7. Microsoft, not doing well. Meta, not doing well. If you're going to play the Mag 7, maybe get into Google. But no, I don't like it as a sector. Okay, maybe Google. Okay, Amazon. I can't even think of the other Mag 7, but I just don't like this sector in terms of outperformance going forward. There are better things on your plate, and we mentioned that before. Bitcoin, just because of the monkey hammer, I don't think it outperforms going forward, and especially the Bitcoin miners, Mara. I'll use this as a poster child. Not looking good. I don't see anything positive about this development, these guys. Okay, and of course, the last thing that I don't like is oil, perpetual bearishness. The fundamentals are bearish, the technicals are bearish. Stay away from it, okay? Stop trying to catch bounces, like I'm going to buy oil to catch the bounce. Better to short it, short pops, okay? So that's it, guys. If you like it, I hope you like and subscribe. I really appreciate it. And if you have any questions or comments, just ask them below and I will get to you as fast as I can. So that's it, guys, for today, and take care.